show you a trade that I have taken in the February series, and as usual, I just thought that I will run you through uh, the thought process behind the trade and what is the plan going forward. So the trade that I took actually is SBI. So we can just see here. This is my Zerodha account, which is showing that our entry on SBI futures is at 289. It's currently priced at 390, and we can see notional gains of around 3 lakh rupees in this at the moment. And of course, the overall portfolio is at the moment at around 25 lakh rupee, a notional gain for the February series, and means a total amount of roughly 1 CR has been used for this, more like 95 lakh, but just taken some positions in the day to day, so they are showing the margins here. And nonetheless, coming back to this trade, so we can see that we are up around 100 rupees on SBI, and it's a good trade relative to the other trades that we have taken for the February series. So I thought that maybe I will share the thought process behind this particular trade. So yeah, so I've taken us back to March 2020, the peak of the start of the COVID fall, which had somewhere bottomed around April 2020. But at the time, we did not know this, and the idea is to use the price information along with volume to determine what could be the critical points for this particular security. So SBI, obviously, we see that it has been trading in a range for the full year, with approximately 375 being the structural high. I'll just mark this resistance point. So with red. Now what we see here is that in this particular range, we can clearly see that during this period of consolidation that we see here, yeah. So this period of consolidation, clearly a rectangular range, and a breakout here is a breakaway gap on SBI. This is also at 315 levels by 28th February 2020, and a little and yeah, this had already warned us that there a breakaway gap could be followed up by a continuation gap, and it was sufficient proof of concept for the longs to exit the position here. But nonetheless, as the fall starts on SBI, what we basically see first here is a formation of a doji on a very high volume. So to understand the volume here is indicating, I mean, if I move the cursor, but on this particular, we can see it's approximately 150 million, which is three times its standard volume. So this bar behaves like the anchor bar and is a reasonable point of reference for us in the future. And so we mark this here. A couple of days later, we see this incredible bullish engulfing candle, and we see this with the formation of huge volume which matches this one. So once again, the highs and the lows of this candle also becomes a point of reference where the low should basically be a point of support for us. Subsequently, after the fall, we see a series of combination. For example, here from this low, we see SBI form a bullish piercing candle, which was followed up by a doji and a series of confirmation. So we see how the price reacts, and we can see that the low of this now acts as the new support point for SBI. Soon into the trade, we now are in the month of April. We are seeing SBI consolidate with this region being a reasonable resistance, but it has not been tested much. There has not been as much volume. So we can clearly say that SBI at this point is only confirming whether or not 175 level is a suitable base for it or not. Uh, Soon enough, the break happens furthermore. SBI in the month of May continues with its downward fall, forms a spherical bottom, and here we see another entry back into the support zone, and this time with an even higher volume, and we can see that the volume is at 200 million. So we have these support zones, and we are now seeing a saucer like formation giving us another support zone, and this one comes in at 150. So clearly we are using at this point in time, we are only using past price information to develop areas. This is obviously in the month of May, we are well aware of these prices. We are only using this information to determine areas of potential supports and resistances. We see this huge volume green candle followed up immediately by a bearish counter attack, and a bearish counter attack confirmation, automatically giving us the high point of this very small zone. And here we will mark this with the light red. And SBI now continues to trade between the approximate 195 level to the 150 level, and we are now in the month of June. The range is set, and again another high volume candle testing the highs of this zone. There is a partial test. We are now trading in the month of July. Still this resistance holds good. Again in the late month of July, the resistance holds good. Another huge volume candle in very tight slots of 185 and 195. Now we have seen SBI trade in this particular zone for a greater part of roughly 4 months. August, and another high volume candle to finally break out from the 197 zone. And this now basically initiates, at this point it is reasonable to say that someone tracking SBI in the month of August could have considered going long with a stop loss of 185. Not necessarily it's a profitable trade, but definitely you have a huge risk reward because the subsequent resistance is at 250. So anyways, it is always a range trade is best when it is taken at a range bottom, but taking a breakout of a range is also a potential trading plan. Nonetheless, the rejection continues, but this level keeps holding, and SBI subsequently takes out the 205 resistance mark, which we can, yeah, which is a very short resistance. But in the process now, it is for the first time creating a higher top, because this particular resistance has now been taken, and now the hypothesis sets here, wherein we can have this as a potential higher bottom. So it's just a question here. We are now getting a higher top, and if it is indeed a higher top, higher bottom formation, then this 185 low should generally hold, or at least there should just be a double bottom. But let's see, a bearish engulfing. Still this low is holding. We'll see how it works. And this low goes. SBI once again confirms itself in a range, and this time it shows a high resistance at around 230. This process continues. Now we are in September. Again these blue lines, sorry, these green lines hold, and this argument is now refuted. We are now in October, and now we basically see that at around 185 190 levels, SBI once again, after a formation of a doji, shows these huge volume breakouts from 207. So we had already seen a huge volume breakout from 207, and we are once again seeing this from 197 to 207 range. SBI gave yet another huge volume breakout, and this time we have to see how it reacts with the 230 resistance point. And again SBI takes out the 230 resistance point only to lose that value again. But we are now beginning to get a much wider range in SBI. So you can see that from the period of April to August, we are in a very tight range. But as we move towards September till November, the range in SBI has now started widening. So now SBI is on the high of the range has become very interesting. And we continue with this move forward. We are now in December, and SBI is now at the second point of this range. You see a series of bearish candles here, but it is and a fall to take a support at around 250 levels. Let us see how this behaves. We are now in December, and a huge move. I mean, SBI is showing a lot of strength now, and we are obviously clear here because with this kind of a move that we are getting almost here a rounding top, a bottom, and clearly a new high that is getting created. That this is now within a range moving like a trend, and it becomes very clear for us that whenever we see a pullback in this after a clear breakout of this zone, that whenever we see a pullback in this, it is justified to buy because we have the confirmation that this time is indeed the higher bottom. Nonetheless, we track the price, And now after creating this high, SBI is indeed showing the pullback, and we are approaching the month of January, 25th January. So now here we can see that this is a pullback after creation of a fresh higher top. It warrants an attempt at making a long, with the assumption that 250 will certainly hold. And let's see how it continues. And here what we get now is that after this fall, this is clearly a bullish engulfing candle. And it has taken support at a much earlier marked price point of 270. It has taken a bullish candle, and now our hypothesis is that perhaps this line is an area of support. 298 becomes the area of resistance, so all these lines below it are now actually areas of support for SBI. And we now can, after this bullish engulfing candle, can justify to take an entry on the break above this candle with a stop loss below this low, and observe SBI behavior around 298, and hopefully SBI creates another high. After this entry, we see that SBI did gap up, created a new high, and came back in, but this was sufficient for us to trigger our entry at 289 future levels, or approximately 285, 287 spot levels. So currently, this is the price action that has formed after this low. And then there was a clear dominating breakout from SBI above 310, creating a new high. This becomes a good, and it has also come with sufficient volume. Another breakout on SBI post hour entry, again with very high volume. Another breakout on SBI, this time with even higher volume with 355. Now 374, 375 region is now becoming the all-time high for SBI, and we are already getting high volumes, and our entry has happened near what was a hypothetical higher bottom. So our behavior here becomes critical, and we largely look at defending this long position and hope that the stock gives a breakout after our entry, and it does with a clear cut gap. And as we can see that SBI opened up at around 390 levels, goes and creates a high of 408, giving a very strong move. And subsequently, after giving this clear cut breakaway, I mean, it's not a breakaway, it's more like a continuation, kind of a fundamentally bullish gap, because it's come with all sorts of volume. We see the formation of a doji, which indicates that it is time for us to be cautious, definitely not add longs, and see if we can defend our longs for some more time. Currently, as it stands, SBI has continuously given us these dojis. It's now today, the 11th of February. SBI is trading at approximately 390 levels. Our entry at around 289 future levels is marked, and this is how it looks. So yeah, so what we basically see is how through just one lot of SBI, with the formation of a bullish engulfing candle and a small confirmation after it, we took the trade with a very small risk, and we are currently sitting at a very strong position. And we hope that this results in the formation of a flag pattern, and that this move from 270 right up till, sorry, 290 right up till 410 is the pole. That will become a dreamlike situation if that is actually to happen. Then I means SBI then stands for a target of 530, which will be quite epic. And our job as swing traders becomes to hold on right till the end of the swing, and hopefully we can catch up a good move. So yeah, so just to conclude, we observed price actions in the past, we determined the regions of support, we identified where the higher top, higher bottoms were getting formed. On the formation of a higher bottom with a bullish engulfing candlestick, we came up with the entry. Subsequently to the entry, we saw a clear cut breakaway fundamental gap with huge volumes. And now we continue to, given that SBI is sort of trading at its all time high, uh, we um, we um, we hope that the breakout is justified, and our objective becomes to carry long positions onto the stock for as long as reasonably possible. So hope this video gives you an insight on how it is important to let your winners run, and how we can use simple charting tools to get a reasonably good risk reward entry, and when one of the trades pays off, it pays off quite handsomely. So yeah, have a good day. See you soon.